here. Oh, I hope you heard all that. I think I was muted. All right, welcome again, guys. Sorry if I'm repeating myself. I may have been muted, but welcome. Tuesday, 19th of July, trade day, bull versus bear webinar. Steve Miley on the call. Maybe hearing that again, maybe repeating myself. Apologies if you're hearing that again. The microphone was muted, potentially. Right, we're going to go for our usual regular run through in here today. Going to go through this fairly quickly in here today, guys. Not a huge amount to add to what we discussed yesterday. We'll take a look at the calendar, what we've had, what we've got coming up, fundamental, geopolitical, macroeconomic outlook. We'll take a look at that on what's going on from the major news wires. We'll also take a look at the charts, what's going on the charts, where are the potential trigger points for today amongst the markets that you guys are looking at. So looking at the S&P Mini, Nasdaq. We'll take a look also at the, oil and gold. Right, let's take a look at the calendar first of all. Employment report out from the UK this morning. None of these really having a massive impact on markets you guys are looking at, but potentially given a little bit of a boost to European equity markets this morning and helped US futures slightly higher overnight. So we had in here the employment change and then the unemployment rate beating expectations in the UK in here. And the claimant count, which is similar to the NFP number in here, slightly worse than expectations. But overall in here, a positive employment report showing at the moment, the rate hikes not having significantly negative impact in here. So that's a positive in here. And CPI data out of the Eurozone, bang in line with expectations. So generally, you would say a positive data coming out of Europe this morning. European equity indices have bounced higher. Go take a look at those now. So you can see in here, we're seeing generally just, we were weaker this morning and rebounded in here. So most exchanges you actually some slightly lower in here, but most are slightly up in here this morning. What else do we have in here? Going into today, go back to the a light calendar on the US side. Building permits, housing starts, never really moving markets in here. Bailey from Bank of England speaks at noon Eastern time. Probably more important, we've got Brainard speaking for the FOMC, 2:35 this afternoon. And then we have the crude oil stock in here at 16:30. 4:30 p.m. Eastern time. Certainly watching out for that. If you're trading oil, okay, that's what we've got coming up. Earnings calendar. Well, most of the stuff's already out in here today that we've got coming through from today. Johnson & Johnson, big hitter in the indices, is one of the top 10 companies, top 10 companies by capitalization in the US, is beating expectations in here. Just Lockheed Martin just missing. And then we've got some smaller reporters in here. Netflix is a really important one. Not so much because of the size of Netflix. Netflix not is big, but not ridiculously big in the indices. But Netflix is seen as a barometer. It's seen as a reflection of not only the US consumer, but the global consumer. Okay, so I think it's important to really, you would need to be watching Netflix now. Obviously, that comes after the bell, so it won't be till after effectively the market's closed, and then potentially while it's closed or while we're before we reopen. So, but we're certainly watching out for Netflix at the end of the day today after the market closing here. Morning, Clinton. I see Clinton's on this morning live. Great call on the levels yesterday, as always. 38.19.75 to within a tick. Yep. So there will have some of the levels working out. If you do check out my levels, guys, go to the Trade Day members area. You'll see that the market report section in there, they go up. These updated daily in here. So do take a look at those. So thank you for that, Clinton. What else do we have in here? So that's what we've got on the earnings side today. Fairly light Netflix after the bell. Most of the stuff already out. You can see mostly green in here today, apart from Lockheed Martin. So a positivity there, adding to the kind of slightly positive European data that we're seeing this morning. We did get a slide though yesterday. We looked at the levels yesterday. I'm just going to quickly dip across we'll go back to the charts in a minute. But I was pretty certain we're going to go up and attack these levels up here, right? So we had the top side levels, the high in here from earlier in July, and then the high over here from late June. Say on the S&P, they were at 39.22 and 39.50. We stalled, just after the open back from there. Market was sitting pretty much, was doing pretty well for most of the session. It was a late sell-off. And most of that late sell-off was to do with Apple in here. So Wall Street closes down and slide in Apple shares. Bank stocks also lower. And Apple's slide in here, they pick it up on 5 things to start your day. Apple Inc. latest major technology company to rein in hiring and spending plans. So that was announced Adding to the evidence that even Silicon Valley are worried about a recession. So that in there saw obviously Apple stock go lower yesterday towards the close into the second half of the session, and then pulled the broader indices down. Okay, and obviously pulled the tech sector down. Bloomberg also reported that on Monday, sorry. And that's the most cautious stance mimics the approach its tech peers, including Amazon, Alphabet, and Microsoft, have been doing anyway. So that's obviously a negative in here. Sent stock sliding, increased trepidation surrounding tech earnings. Full things. We got IBM lowered its forecast in here as well. So we had IBM as well. So Democratic Party senators are urging Joe Biden to declare a climate emergency. Okay, but is that really impacting right here, right now? Not massively, but we've got obviously issues going on with record temperatures. Actually, we've hit in the UK today. We hit a new record high in temperatures in the UK, and then we've obviously got the whole thing going on with the Gazprom. We've got the natural gas prices pushing higher, etc., with the whole situation with Russia, Ukraine. With the Federal Reserve meeting next week, pricing an interest rate hike of at least 75. Well, we've been monitoring that, right? But that is actually ebbed lower. We talked about this yesterday, right? This column in here, this is the 100 basis points. So back to, pretty much going for 75 now in here for next week's meeting. Yes, 65% chance of that. So we'll certainly be monitoring that as we go through it. And Fed speakers, I think the Fed kind of basically quarantine's not the right word. They don't use the word quarantine. That's definitely not the right word. I can't remember. Embargo. They put an embargo on speakers. So I think it's a week before. So today's, I think, the last day we'll get Fed speakers because obviously the meeting actually starts. We get the decision in just over a week's time, right? So the decision is 27th of July. So the decision comes on the Wednesday, but the meeting's actually over Tuesday, Wednesday. So I think today's maybe the last day for Fed speakers. But we'll double down and check on that. But I don't think we're going to get many more Fed speakers after today. Right, what else? I'm going a little bit off piece in here. So Fed hikes, dollar drops. We talked about this yesterday. Yeah, dollar was already falling, dollar's fallen again, and the euro has rallied. Now, this is an interesting point. Often when the euro rallies against the dollar, other currencies rally as well because it's seen as dollar weakness, because then the dollar EUR USD goes up, euro versus dollar goes up. Then we see the dollar index, which is a big proportion. Over half of the dollar index is made up of EUR USD in the dollar index. So then dollar index goes down, and then that usually helps other currencies go up. So most currencies are up against the dollar. So the dollar's been weakening. Dollar weakened again in here this morning. The euro's up over 1%. Aussie dollar up over 1% in here. And we're going back into that risk on theme. Yeah, Aussie's up. Kiwi is up over 1%. The Australian and Kiwi dollars are both up like 1.25% in here this morning. Dollar Canada actually interestingly sideways, but the commodity currencies, Aussie and Kiwi up. The euro's up because there's an anticipation now that the ECB, remember we spoke about this, the ECB, the European Central Bank, are meeting. They may consider 50 basis point hike. So European government bond markets have gone down, lower in price, higher in yields. Bonds selling off in Europe, down in price, higher in yields, with an anticipation of a more aggressive, a more hawkish ECB, than previously thought. We were expecting probably only a 25 basis point hike. And that brings me nicely in here to the next couple of pieces in here. So we've already spoken about Apple in here. So US stock futures climb amid earnings, with Apple lower in here. Previously, ECB said to assess half point rate hike as lift-off nears, and dollar weakening, on the back of that. And here, look, ECB is looking more closely at half a point hike. Official guidance was 25. That was a move at lift-off, but poised to decide if on first rate hike in a decade. So that's coming on Thursday. And that's been part of this is because Lagarde redoubles push on new ECB tool. So remember when they at the last ECB meeting, when they started to announce that they were going to hike rates, we got kind of some fractional activity in the European government bond markets, where the peripheral bonds, so the peripheral bonds are seen as outside of really France and Germany. So peripheral bonds would include Italy, Spain, etc. And Italian bonds particularly, there's a bit of a political crisis going on in Italy at the moment, and because of that, Italian government bonds aggressively sold off, and because those Italian government bonds aggressively sold off, more than say Europe, the core bonds, it's going to put higher yield pressures on Italy, and because this could be seen as a problem, they're going to put in a new tool. So they announced they're going to put in a new tool, but they still haven't given us really much more information of this new crisis tool. Okay, and the crisis being because of the Ukraine-Russia conflict. Okay, and because of the high inflation we have going along around the planet. Okay, so because of that, they're going to put in this new tool where they can actually then continue to buy maybe say Italian government bonds to keep those bonds lower. Okay, so this 50 basis point hike might be like, as they're talking about, is like a give and a take. Okay, so I think they talk about it in here. ECB weighs bigger rate hike with safety net for indebted countries. Okay, so basically bigger rate hike. Okay, but then new bond buying tool to come in, but they still are hammering out the deal on that. Okay, so that's all going on in the background. Okay, but what it has mean is it's helped the euro higher interest rates. Okay, makes it more attractive. The differential of interest rates narrowing to the US, and because of that differential between US interest rates and European interest rates narrowing, then it means that then the euro is strengthened. So what we're seeing in here is we're almost seeing peak hawkishness has passed for the US, for the Fed, right? We know basically the Fed have played catch up with the curve and almost got ahead of the curve. Okay, so we're not expecting the Fed to get any more hawkish with their interest rate hikes. Well, what we're seeing from other countries is we're seeing they becoming more hawkish, right? Here, the ECB in Europe becoming more hawkish, helping the euro higher. We've seen Australian and the RBA become a little bit more hawkish. We saw last week the BOC, the Bank of Canada, unexpectedly hiked rates 100 basis points, 1 full percentage point, when the expectation was for 75. All of this is helping those currencies regain ground against the dollar. That's why the dollar has weakened. Okay, it's not so much that we're expecting the US economy to weaken. It's not because we're expecting the Fed to become less hawkish. It's because other central banks are playing catch up. They're playing catch up to the Fed, and because of that, that's why the dollar was so strong, because the Fed were amongst all the global central banks was almost ahead of the curve, was ahead of those other central banks in its hiking. Not so much the Bank of England, but nevertheless the pound versus the dollar still went down anyway, even though the Bank of England have been very aggressive as well into the UK economy. But nevertheless, we've seen the US surge, the US dollar surge as the Fed were more hawkish through the first half of this year. And now the other countries are playing catch up. The Fed have not become less hawkish, it's that the others are coming more hawkish. So de facto, it means that relatively the Fed are less hawkish, relatively, okay? And that means that's adding to this turn in the dollar, the weakness in the dollar. And obviously the weakness in the dollar is actually good for US stocks. Okay, I think this is interesting. So I used to work at Bank of America. This used to be the Merrill Lynch Fund Manager Survey. Yeah, look, the monthly BOA Fund Manager Survey used to be the Merrill Lynch Bank. When I used to work, I didn't used to work at Bank of America. I worked at Merrill Lynch. And when I worked at Merrill Lynch, the Fund Manager Survey was always much watched, right? But it's often seen in the long run as a contrary indicator, right? So basically, expectations for global growth and corporate profits have plunged to a record low, according to this survey. This survey's been going decades, right? So it's a long survey. So, but then is this contrary? Is it saying now when everyone's the most bearish, is that the time to, longer term to be buying it? So for me in here, so look, fund managers said with cash levels rising to their highest in more than 2 decades, investors cut their exposure. So cash levels at fund managers are at their highest for 20 years, for 2 decades, right? What that tells you is there's loads of cash on the sidelines to come back in and buy stocks when they believe that it's turned, when they believe the worst is over. And I think we are getting to that point. I do believe the bottom went in June, July on US and global stock indices. And I think, I don't necessarily mean we're starting a new bull run. I don't necessarily think we're going all the way back up to the highs this year, but I don't think we're going to see new lows. And I do think the path is higher going into the second half of this year. Right, what else do we have in here? We've already looked at these. So European stocks kind of mixed in here this morning. They were lower, they have rebounded. US stock futures having dropped yesterday, but you're looking here, the Dow gave up basically 7/10, but we're back up 6/10. So it's given up. Stock indices in here recapturing what they lost. This morning, the Nasdaq up 8/10 in here. So recapturing what we lost. We've already looked at this already. Let's take a look at the charts. Okay, so we dipped. So there's the S&P. So we dipped. That's what we lost yesterday. We almost got back what we've lost. If we step into the 15-minute chart in here, as Clinton has kindly said in here, the levels kind of worked, 38.1975. Yesterday we got down to, where was the low? So overnight low in here, 38.32, right? Is that right? No, that's wrong. What am I talking about? 38.20 and a quarter. My level's 38.19.75. That's that little spike low there. Okay, you can see that spike low there, 38.19. So this is where I got the level from, that low there, 38.19.75. This swing low before then we got this gradual, so it's an impulsive move higher, check back, pushed higher. There's the low there that I, got my level out off of. I put the horizontal line on, boom, there. And then overnight you can see we hold that to half a point. 38.19.75 was a level, bounce off of 20 and a quarter. So that's still the unimportant level to monitor. But now we'll rebound from there, consolidate, and a firm rebound. I'm looking for the next swing back high. So really back up to yesterday's highs. And if it gets back up to yesterday's highs, then it's a real risk for these key levels topside. 39.22, 39.50. So watching out for those. So those are all the key levels. Yesterday, I think, risk up to yesterday's high. Yesterday's high, 39.09 and a half. Then we've got 22 and 50 above there. Going into the 15-minute chart, where do you buy on the next swing? Well, you got this very tentative trend line in here that comes across this from the top. It's not going to be the most useful trend line. I'm going to send this out. So we can get back above here. That trend line's coming in around 38.82, 38.83 kind of area. You've already got above this little peak here. There's nothing really else in here. The only other thing you can get from levels to where to buy through on the top side, we'll go for a retracement. A retracement of yesterday's sell-off gives us this. And you can see, okay, we've failed just below the 61.8, okay? So either back up through the current high for the overnight this morning is being 38.71 3/4, and then you got the 61.8 that comes in around 38.75. So up through 38.75. If it dips into here, I think this is the buy zone somewhere in here. You're looking for it to dip and turn around here. So somewhere between 48.50. I'm looking for it to come into here, buy here, or up through the 61.8, up through 38.75. Those would be my trigger levels if I was trading this on a day trade. Okay, well, let's have a look at the Nasdaq. So the Nasdaq, you can see, has got back most of yesterday's losses. Again, we fell below these peaks in here. So you got this early July high there, 11,952 and a half. Yesterday we got up to 11,857, and then this late June high is 11,994 and a quarter, just below 12,000. Those are the top side levels on the Nasdaq. Go into the intraday. What have we got? Well, kind of similar level in here that I outlined. In here, if I ping this on, this little swing low in here on the Nasdaq was 11,985. Where did we hold last night? Overnight, 11,8. No, that's wrong. 11,857 was the low. Where's the low here? 11,853 and a half, excuse me. So it's the same levels on the S&P. 11,853 and a half. We held at 11,857 on the Nasdaq. So it held at the right place. Consolidated, dip, rebound, surge higher, dipping now. Again, a dip in here. I think 11,960, 11,950 is the buy zone. Again, we haven't got really much in here. It was a bit of a plummet that we saw yesterday in the afternoon session in here. So where am I looking for in here to get back above? Well, again, I'm going to have to rely on the Fibonacci retracement. And then we kind of gone right up to the 50%. We just nudged above the 50%. So the high there is overnight high 12,028. And then the 61.8, 12,059. So through 1260 would be potential trigger to the upside, okay, for me. Okay. Let me take a look at, we've got gold on the daily, first of all. Dead cat bounces. Boop, 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 can't bounce. Bounced and failed yesterday. Trying to bounce in here again today. Despite the dollar weakness, this is what's really worrying for gold is it can't go up with the dollar weak. If it can't go up with the dollar weak, yeah, it went down with the dollar strong as it should. The dollar's weakening, right? Let's go and step and take a look at the dollar. There's the dollar. Do. 3 straight down days, getting hammered again in here today. This should be helping gold. What's gold doing though? Well, that's not gold. Nothing, right? So again in here, it's trying to base. I mean, if it does get above yesterday's high, you can go long, right? Yesterday's high, 1722. If it can get above there. For me, though, I think it's going to fail before there, and all the risk is lower. Any kind of bouncing in the dollar probably sees gold lower in here. So I'm looking, probably framing that from the short side. Oil's reinforced the base. Remember, we talked about this yesterday. Look, surging rally in here for, where are we? That's not oil. Surging rally yesterday for oil. It's dipping back lower in here today. Let's go to the 15-minute chart. We spoke about the inverse head and shoulders down here. It's now we've got higher highs and higher lows. Yes, it's falling at the moment. Okay. I think this is a tough one. You know, I think there's two trades in here. I think you could be short right now. Look at the losses in here for the last couple of hours. This is a 15-minute chart. I think you can go with that for a move down towards probably like 98.5, 90, 97.5, down into this area here. Then there's potentially, look at this trend line. If I'm going to extend this trend line out. If it gets down into that zone there and ahead of this little low here, that low there, 98.39. If it can hold this low here at 98.39, hold this trend line, then probably look. So can be short down to the trend line and down to that low, and then maybe looking to buy in this zone in here. Because we do have higher highs and higher lows. It does look like it's putting a bottom. So yeah, I'd be, I think there's two trades there. For now, short, but there's probably a long opportunity later in the day. All right, I'm going to wrap it up there. If there aren't any questions, I'm going to say wish you all a great trading day. Stay safe out there, and I'll be back with you with another bull versus bear webinar tomorrow. Take care.